In early 2025, a financial storm erupted that rattled investors across the United States and sent shockwaves through global markets. At the center of it all was a company most people had never even heard of, China Liberal Education Holdings, a small-cap stock that suddenly became the hottest name on trading boards and social media groups. Out of nowhere, its shares began climbing, pushed by what looked like a wave of excitement about the company's growth prospects. But what seemed like a golden opportunity for everyday investors quickly revealed itself as one of the most brazen pump-and-dump schemes in recent history. The fallout left ordinary people counting losses, while a group of international fraudsters walked away with staggering profits. The mechanics of the scam were as old as the markets themselves, but in 2025, technology and global networks gave it new power. A team of conspirators based in Malaysia and Taiwan orchestrated a plan to manipulate the company's stock price. They started by buying large amounts of the company's shares quietly, before anyone else noticed. With their position secured, they then launched the pump phase, spreading hype across every corner of the internet. They hired promoters, used fake accounts, and filled Telegram groups, Discord channels, and social media platforms with glowing claims about the company's future. They even used fake press releases and misleading stories, making it appear that China Liberal Education Holdings was on the verge of major breakthroughs in education technology. To ordinary people scrolling through feeds, it looked convincing. Everyone seemed to be talking about this stock. The message was clear: if you don't buy now, you will regret it later. Once the buzz took hold, thousands of small investors jumped in, buying shares at higher and higher prices. This was exactly what the fraudsters wanted. They knew that fear of missing out would drive the price up, not because of real business performance, but because of human psychology. As the stock surged, people felt validated in their decision, believing they had spotted the next big winner. But behind the curtain, the scammers were executing the second part of their plan, the dump. As soon as the share price hit the peak, they began selling off their massive holdings at inflated prices. Every share they sold was being bought by a hopeful investor who believed the hype. The fraudsters cashed out millions, while ordinary people were left holding overpriced stock that was about to crash. The collapse was sudden and brutal. Without the artificial hype to keep it afloat, the stock of China Liberal Education Holdings plummeted. Within days, the price fell back to its original levels, wiping out the savings of countless investors. Those who had bought in late, often at the highest prices, lost the most. They had essentially handed their money directly to the fraudsters, who had orchestrated the entire cycle from start to finish. This is how a pump and dump works: create excitement, lure people in, sell at the top, and disappear while everyone else suffers. When U.S. authorities began digging into the unusual trading activity, the scale of the fraud became clear. Federal prosecutors charged 5 individuals, all linked to Malaysia and Taiwan, with orchestrating the scheme. They weren't just playing small games on the margins. In total, they had managed to manipulate the market to the tune of more than $214 million. That number stunned even seasoned investigators who had seen countless pump-and-dump cases over the years, but rarely one so bold, so international, and so devastating in scale. The arrests marked a major win for regulators, but they came too late for many investors who had already lost life savings chasing the hype. The human side of this story is perhaps the most painful. Many victims were retail traders, ordinary people who had been drawn into the markets during the pandemic years and stayed active looking for new opportunities in 2025. Some were retirees trying to grow their nest eggs. Others were young professionals hoping to build wealth quickly. They trusted the buzz they saw online, the message boards full of glowing comments, and the sudden surge in stock price that seemed to confirm the optimism. For them, the collapse was devastating. In interviews, Some described watching their accounts bleed red in a matter of hours, unable to sell fast enough before the value evaporated. Others admitted they ignored their instincts because the hype was so overwhelming, believing that so many voices online could not all be wrong. What made this scandal particularly dangerous was its international dimension. The perpetrators weren't operating from Wall Street or even within US borders. They were spread across Malaysia and Taiwan, exploiting the fact that global markets are interconnected and that regulators often struggle to keep up with cross-border fraud. This raised an urgent question: how many other scams like this might be quietly unfolding, orchestrated from overseas while targeting American investors? The case highlighted just how vulnerable the system remains in a digital age where anyone with a laptop, some capital, and a network of accomplices can manipulate markets from halfway around the world. The U.S. Securities and Exchange Commission and the Department of Justice issued strong warnings after the arrests. Officials emphasized that pump-and-dump schemes remain one of the most persistent threats to investors, even in 2025, when trading technology is more advanced and data analytics are stronger than ever. They pointed out the classic warning signs: sudden, unexplained spikes in thinly traded stocks, aggressive promotion on social media, and promises of outsized returns. Yet despite these repeated warnings, many people still get caught, lured by the dream of easy money and the fear of missing out when they see others appearing to profit. The scandal also reignited debate about the role of social media in financial fraud. In the past, pump-and-dump operations relied on newsletters or cold calls. Today, they thrive in the digital world of Telegram groups, Discord servers, and anonymous accounts on X and Reddit. These platforms allow fraudsters to amplify hype almost instantly and reach thousands of investors in minutes. Even more troubling, they can disguise their identities, making it extremely difficult to track the origin of false information. In this case, the conspirators leveraged these digital tools to perfection, creating a mirage of enthusiasm that tricked even cautious traders. For those watching from the sidelines, the lesson is clear. If a stock with little visibility suddenly becomes the talk of every trading group and its price skyrockets without any credible news from the company itself, caution is the only safe response. Genuine growth takes time, is supported by financial results, and is usually covered by reputable analysts and news outlets. Scams, on the other hand, thrive on speed, secrecy, and emotion. They push you to act quickly, to invest before it's too late, and in doing so, they bypass your natural skepticism. That is exactly how thousands of investors walked into the trap laid by the $214 million scheme. In the aftermath, financial experts stressed the importance of due diligence. A simple background check on China Liberal Education Holdings would have shown that it was a relatively obscure company with limited operations, not the powerhouse that promoters made it out to be. But in the heat of a rally, few took the time to look deeper. This is the heart of every pump and dump, exploiting human psychology, the desire for quick gains, and the assumption that rising prices must mean opportunity. When combined with international coordination and modern technology, the outcome was catastrophic. As the legal process continues, the story of this scandal will serve as a cautionary tale for years to come. It reveals not just the audacity of the fraudsters, but also the vulnerabilities of a system where information moves faster than ever, and where regulators are often chasing events after the damage is done. For investors, it is a reminder that markets are not just about numbers on a screen, but about trust. And when that trust is exploited, the losses go far beyond dollars. They erode confidence in the very system itself. So the next time you see a little-known company suddenly explode in popularity and price, remember what happened in 2025 with China Liberal Education Holdings. Remember the retirees, the young traders, the hopeful investors who thought they were grabbing the next big opportunity, but instead we're left holding empty promises. The truth is simple. In finance, shortcuts are often traps. If something looks too good to be true, it usually is. The $214 million pump and dump scandal is proof that even in a world of advanced technology and global oversight, greed and deception can still find a way to fool us all.